Day traders, Raghee here. We're going to dive right into the day trades from this morning, the alerts that I sent out. And just a quick reminder that usually well before 9 a.m. Eastern, I send out my notes for the day. Now, the first half of the notes is typically going to be some basic stuff, how to read the updates, where to download the Simpler Trading mobile app, and just some general thoughts, bigger picture things that I've got my eye on, whether that be the non-manufacturing PMI, the EIA inventories, the move lower on gold that I know a lot of you had questions about, and bonds, which we'll tackle, beans, corn, things like that. And then once I kind of get that done, sometime between 8:30 and 9 a.m. Eastern, I'll send it out as an alert so everyone can view it. Now, just a quick reminder, this is on Workflowy. This is a private note, so you need the link to view it. And if you want to view it on your phone, you can download the Workflowy app as well. You know, you could view it through Safari or Chrome or whatever on your phone. But you can also download the Workflowy app, so you can view those there. Also, once I start getting ready for our trading, especially when I'm not on the mic with you all, I'll timestamp everything so you can kind of see what I start doing about 15 minutes before the bell, going to about when I have my final orders out there in the market, and I'm either in trailing stop mode or, you know, the next target, and whatever gets hit, you know, I'm going to be flat by 4 p.m. And that's something else to remind everybody. I'll discuss it again, but I think it's really important. Remember to just kind of check yourself. Remember to, for me, if you're using, and let me just add this in, if you are using day trading margin, which I think a lot of you are, right? If you're using day trading margin, remember when you need to be flat buy in terms of timing. All right. So for me, I will usually be out by 3:50 p.m. All right. I'll usually be out by 3:50 p.m. I don't want to linger too long. I mean, we don't have to be out by 4. We have till 4:15, but 4:15 p.m. is my cutoff. All right. So keep that in mind, because this is a time-based exit for those of you that are using day trading margin. I can't set you up for a trade at 3 and assume that you're going to take this into 6 p.m. because in that, say, for example, 3-hour gap, most brokerages are going to tell you there's a small window of time that you will need the full margin requirement for that position that you're using day trading margin for. So keep that in mind. And I will be cognizant of that when I'm alerting everything out to you all. All right, so let's get to it. So we start time stamping everything, and pre-market, I was looking to see if maybe we can get a 935 entry because we had some propulsion dots that were steady. The bell rang, and the volatility that comes with it ended the propulsion dots. We did not get any 935. As I like to say, no dots, no dice. And by 947, we don't have anything that we can do inside the clearing. So basically, we're ready for non-manufacturing PMI, and then waiting for the clearing range. All right, and that's what we did. We waited for the clearing range. All right. So with that being said, by just after 10 o'clock, NASDAQ and Russell breached their clearing range high. Terrific. That gives me a breach retreat. Those alerts went out. Now, when you're reading these alerts, and tomorrow, I'm going to alter these a tiny, tiny bit because a few folks seem to be a little bit thrown on, which is aggro, which is the stop loss, and I know that when you look at the app, it doesn't organize it very, very well. It turns it into sort of one run-on sentence. So what I'm going to do starting tomorrow is I'm going to put like this. I'm going to do aggro buy. I'm going to do the moderate buy. So I'm going to do it that way so you guys don't have to, look at the lowercase letters to sort of separate. So I'll do that as of tomorrow. I'm going to change the formatting a little bit. All right. And hopefully that's going to help with the clarity when you're getting all these sent onto your phone and also in the room. Same thing will go with the stop loss. And same thing will go with the target. All right, so we'll slightly update that so it's a little bit easier. Okay, so just kind of give you an idea of how we're going to do that. All right, so we had our breach retreat on the NAS. We had our breach retreat on the ES. RTY, I was pretty bummed about because RTY was a terrific trade. It came back a little bit, but not enough to tag our entry. That low was 44.6. The low was 44.6. And the level that I was looking for the RTY aggro buy was 42.3. So right about 2.3 points, right about 2 points shy of that entry. And that one, gosh, you know, I'm happy with my aggro entry. There's a reason that I waited for a pullback to that depth, but just did not get there. ES tagged the aggro, and the NQ not only hit the aggro, but the moderate as well. So one thing I want to remind everybody is if you have an aggro setup and you look at the distance from the entry to the stop loss, and that chasm is simply too large, right? We always say that our risk is entry to stop, and the largest risk is going to be the aggro. Next largest moderate, smallest is conservative. Don't underestimate how much more comfortable, how much more affordable, how much more risk you can tolerate if you grab a call option in the case of a breach retreat buy, a call option in the IWM or QQQ or NQ, etc. You know, don't underestimate at aggro levels, those futures options or those ETF alternative options are really going to be great, well, options. So if you've been passing on the aggro and noticing, gosh, the aggro gets hit a lot, but the risk that, you know, carries with it is so great, well, maybe try the options. And we'll talk about that tomorrow. We'll discuss, you know, what part of the chain we're looking at is typically at the money, and also look at the strikes. So at the money strikes, you know, they're usually one wide, and the following Friday expiration. So if you're looking at IWM for the RTY, you're going to be looking at the next Friday, not in a few days, the following Friday expiration at the money or slightly in the money calls. Okay, all right. So that is the S&P, NASDAQ, and IWM. All right. So I'm not going to cover the ES and NQ. I mean, I think the alerts and the notes have it pretty much covered. Breach, retreat, followed through. The only thing that I'm going to touch on with the ES and NQ is this. When I have my closing orders, they're to scale out, which presumes multiple contracts, right? So as we hit the first target, you move to a break even on the stop. As we move to the second profit target, you can leave the break even in, or you can move to your stop, in the case of today's buy in the ES, to just below the first profit target. So our last profit target, as you guys saw in the alert section, was way up here at, get over there, at 26. That was the last target, and at that point, I'm flat, right? Because why? I'm looking at basically the day ending. You know, I'm looking at 4 o'clock. That's my cutoff. What is day trading, gang? Day trading is not a strategy. It's simply basically communicating, I want to be flat by the end of the day or the session, basically. And for us, again, think about day trading margin. All right. So there we have the intraday setups, and the only other one, and I sent this through in the general chat because this one's kind of tough to do because it can be so quick, although maybe next week I'll give it a whirl. And that was our first come, first serve on crude. Okay, so let's go over that and then we'll take a look at some daily time frames. So first come, first serve, we have the video that I gave you all last week And then I have the video that I gave you guys this week so you can kind of see how that worked out. What is first come, first serve? Well, you might remember the two images that I sent through the general chat. The first one was this. Going into the 10:30 event, we had our HPMR to the up and down side. Ideally, what happens is that after 10:30, so it's really important that you think about this as a post-event entry. I don't want to be positioned before 10:30. I want to be positioned after. We've done this a number of times over the past couple of months. So what do? First come, first serve, as we did last week. Either the thing sells off into the support level or it rallies up into the resistance. Now, if you want to use a combination of V-score and HPMR, that's fine. If you want to use a combination of major and minor psychological levels, that's all fine. But at the end of the day, I am very much relying on the historical price movement range exhaustion. You guys know that's actually worked really, really well. So this was the first image I sent out to y'all. This was the second. So what do? We sunk into that area. Now, what I want to get specific about here is the way you can get in. And you know, we talk a lot about a triangle or a pyramid, meaning your smallest position is here, your next smallest is basically half of the range, and your largest position is at the very bottom of the range. So you basically scale in at those three levels as or if the market gets down there. So we got really through the aggro level at about 36.35 and down to the moderate level at 36.20. And I would have absolutely been fine entering again down at the bottom of the HPMR, which this is still reflective, as you can see, of the way that hour ended. I would have been absolutely fine buying again at 36.05, 36.03, and putting our stop on the other side of the HPMR. So this is just another example of, you know, not just crude. I mean, this isn't a crude oil setup. This is an HPMR setup, gang. What is this? It's an hourly price movement range entry that uses a high impact, high volatility event to take advantage of a dramatic amount of movement in one direction or the other. Now, dramatic is better defined as a historical price movement range defined exhaustion level. So that was crude. All right, lots of questions on gold. Let's tackle gold here. And, you know, gold moved lower. In terms of, now remember, gang, in the June contract, we were 1705 to 1688. In the August contract, 1705 to 1688. I don't mind 1715, 1720, 1701. I mean, we've talked about a lot of these levels, but the thing that's remained constant through both of these contract months is that zone between 1705 and 1688. So I don't feel like we're going to miss this trade. You know, really, I'm not feeling like this market's just going to zoom up to 1750. I mean, who the heck knows? But if you're waiting for the market to get down to 1705 to 1688, remember, you know that your stop is on the other side of 1688. That means that if you look at the, you know, let's call it the 1700 to 1688 zone, right? The 1700 to 1688 zone, those 12 points. Inside those 12 points would really be your moderate and your conservative. The 5 points from 1700 to 1705, you could consider your aggro. So in the aggro area, say the top 5 points of an overall 17-point range, you can consider calls in GLD. You can consider calls in the GC. You can consider the MGC micro. And by the way, let me just go back here to the CL. You know, you can look at QM in this situation. You know, as you're looking to enter a CL on a volatility move, you can look at the calls in CL or the QM mini, which is 1/2 the size. So kind of similar idea in terms of using different contracts, using different asset classes if you want to, you know, kind of compare options on the futures to the underlying futures. You know, utilize not just position sizing, but thinking about what zone might be best for the option on the underlying as opposed to the underlying. All right, so this is something that we're watching really, really closely on the end of day chart of gold. Now, as far as the intraday chart of gold, Look, gang, I didn't get into the intraday chart of gold, and I don't want to go backwards in time saying we could have done this and could have done that. That's just not my style. But you'll notice that gold had been selling off pretty steadily since 8 a.m., right? So if you look at the intraday chart of gold, that thing was selling off pretty steadily since 8 a.m. So if you have structure, right, if you have market structure, remember, gold doesn't care about the bell. Not really. Right? Gold's a 24-hour beast. Stonks? Nah. Gold doesn't care about that. So if you've got the opportunity to take advantage of a trend on the 1-minute chart of GC, go for it. Go for it. I'm not going to go back on this because I really wasn't trading it. So tomorrow, if we want to take a look at gold and you guys want to day trade this thing, let me know. But I really was not. I pretty much had my hands full with, trying to get that RTY, managing ES, NQ, and plan CL. So we can look at this tomorrow if you'd like with the HPMRs and everything. And by the way, the HPMRs for these contracts are in the room drive. All right. So if you're catching this on replay, log into the room at some point, go download all those HPMR packs. They're good for 1 week. And then I refresh them on Monday. And then we have another set of HPMR packs with the most recent volatility data reflecting the calculation that I created to plot those resistance and support levels. All right. So and remember too, that the HPMRs have to be considered within the context of the trend. They are not a standalone strategy unless you're looking for exhaustion and a fade. And why would I look for fades when there's a clear trend like we had this morning? So keep that in mind. If we've got a trend, don't think about fades. If we have a sideways market as the market's in wait and see mode before a significant event like the inventories number or say non-farm payroll or whatever, that's a fading situation, non-trending market. But if you have a trending market, don't go step out in front of the train, if you will. Just don't go step out in front of it. All right, so that's gold. Gold and bonds, gang, I'm still bullish in, but let me explain why here for a moment. All right, why am I still bullish gold and bonds? Because it's either that or nothing. They're not shorts to me. These are not short positions. Charles Dow would talk about it this way, and you know what a devotee of that approach I am. The trend that was up. The transition out of that trend is sideways. The bias is still up, and now I'm thinking about oversold buys. Think about an oversold stochastic, a 21K 3D with a 20 reading like we have right now, oversold. Think about oversold indicators like a ready aim fire. Many of you have that tool. Use that. What else can you use? Take a look at the V-score bottoming out here once again at this price level. So we have a number of tools that we can use to identify if a market is still buyable. In this case, it definitely still is to me. Now, you might say, Rog, this isn't a trend any longer, and I don't like the way this is moving. No problem. Then don't trade it. But there's no short here. Okay, there's no short here. So that's where the overall, my overall take on the ZB on the GC is. All right. So in terms of GC, it's still an oversold situation. It's still an oversold market. All right. The last two markets we're going to take a look at is the soybean market. And I'm thinking tomorrow I'll probably have an alert for this, but I'll be with you guys tomorrow in the room. So I'll be doing the open with y'all. So if we see ZS, which I am getting ready to start building a larger position in short, ZC. Gang, the U.S.-China relationship is not going well. Take a look at the U.S. dollar yuan. You'll see where it's at. Take a look at the chatter coming out. There was, if you ask me, and I think I've talked about this before, I don't think there was any expectation that these ag purchases were going to move the needle. They were the same level of purchases that we've seen from China dating back to 2017, so they were not an increase in any way. And there's a lot of question about, even before the COVID epidemic, whether or not China would be able to fulfill their purchasing agreements, if you will, right? So that's really what we're looking at here. I'm going to continue to fade these ags. All right, so I'll see you in the morning in the chat room, 9:20. Hopefully you have some good trades like we have today. And We'll also look at bonds, gold, beans, corn, and I still have that short in crude. So we'll take a look at those puts I've got in crude as well. And I do want to take a look also at puts in heating oil tomorrow as well. All right, I'll see you in the next update.